Good evening, everybody, and welcome to this earnings call. We have with us Mr. P.S. Reddy, MD and CEO, Mr. Bharat Seth, CFO, and Mr. Nilesh Kutur, AVP, to discuss the results. I would request Mr. Reddy to give us a brief highlights of the quarterly results, post which we'll open the floor for Q&A. Over to you, Mr. Reddy.
Thank you, Mr. Praveen. I welcome all of you for the Q3 call. And as you've seen the results, we have done reasonably well. And it's for you to, of course, decide whether it's reasonable or not. But then, in our view, given the markets, we have done reasonably well. I will ask Mr. Bharat Seth to brief you as to the numbers as we are speaking.
Good evening, everybody, and wish you a very happy New Year to all of you. And this New Year really brought happiness to all of us. Financials for 9 months, in the corresponding period, our operational income increased by 29%. I'm talking of 9 months period of 31st December on a consolidated basis. Operational income increased by 29%, whereas profit before tax increased by 18% and profit after tax by 24%. And if you compare it with quarter 3 18 versus quarter 3 17, operational income increased by 36% on a quarterly basis, whereas other income down by 38% due to mark-to-market investment and high rise in yield. Because of that only it has been down, and decline in interest rate. Whereas quarter-to-quarter expenditure is increased by 18%, mainly because of personal cost and system maintenance charges, where 20% raise was there last year if you compare it. So PBDIT 5% increase. And if you see my margin, operating margin at 65%, we are working on it. And on the standalone basis, if you see, 9 months, my operational income increased by 24%, whereas profit before tax increased by 11%, and profit after tax increased by 17%. Market condition, if you see my total operational income, there are 5 major sources where good number of increase are there. Annual charges increased by 8% on quarterly basis. Transaction charges increased by 67% on quarterly basis.
Excuse me, this is the operator. Sir, may we request you to please speak closer to the phone, and the voice is breaking also a bit. So if you could check that, please.
Now?
Yeah, this is better, sir.
Yeah. IPO corporate action charges compared to quarter 3, if you see, it has increased by 122%. And online data charges, that is from the KYC, income has increased by 74%. So overall increase in quarter 3, 36% is the corresponding quarter. And already I told about the quarter 3 on consolidated basis, it has increased by 25%. So I will like people to ask questions, means open. And yeah.
Before you release it for questions, I'm ready here once again. As you are all aware that we continue to get good amount of revenues from three major sources. One is the transaction income, and transactions have substantially gone up, and the new account increase. I mean, the new accounts that are opened in CDSL are almost all 64%. That is the incremental market share CDSL has is about 64%. Now, that is driving as more and more new accounts into the system. Second, that also leads to the higher transactions because they trade in the market, and obviously we get average realization of about 5 rupees per every debit transaction that takes place. second boom that came from is the IPOs. Whenever IPOs are done, right from the beginning of application form and verification, we have a few charges for verification. And when the investors actually get allotment, again, there is a corporate action charges. And this has substantially gone up, in this quarter. And rather, it is 9 months. That is another major revenue stream that we have. The KYC, which we have been, suspecting that it may go away one fine morning, but still continue to do well. As I said, the SEBI has not withdrawn the requirement of doing KYC with KRAs, and since we already have about 1.65 crore fully digitized KYCs, and the mutual fund industry is doing exceedingly well, and more KYC hits have come. That's why our online data charges, that is reflected in the item online data charges. There we have done exceedingly well. The new revenues are trickling in, but it will take some time. Like National Economic Depository, some of you have an expectation, but it will take some more time for other universities to join and upload the data on the portal. Of course, currently the number of universities signed up with CDSL, or rather CDSL Ventures Limited, are more than what is done with the competition. So we are doing still well. There is also eKYC that we have ventured into. That is one area we are growing little by little, and that is also going to give us good revenues maybe in the years to come. And anything else, Bharat, you wanted to add?
First time we have closed 100. And one good news is that first time in the history of CDSL we have crossed on consolidated basis profit before tax of 100 crores, that is 105 crores is there. And in standalone operational income, cross 100 crores within 9 months' time. So now floor is open for the question answer.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Nitin Agarwal from JM Financial. Please go ahead.
Hello, sir. Thank you for giving an opportunity. Sir, I just wanted to know the breakup of revenue of each line item: annual issuer charge, transaction charge, IPO charge, and online data charge for the third quarter.
Definitely. Quarterly. Yes. Yes. Annual issuer charges at against 1287.
Your voice was not clear.
Hello.
Can you repeat? Yeah.
Can you listen in?
Yes. Now it's okay.
See, that is quarter 3 2017 versus quarter 3 2018. I am giving data.
Okay.
Against 1287 for annual issuer charges, it has increased to 1389.
Okay.
By 8% over that. Transaction charges from 759, it has in 1271. That is increased by 67%. Then IPO corporate action charges from 375 has increased to 834.
844.
834. 834.
Yeah.
Increased by 122%.
Yeah.
And KYC data, that is online data charges, from 447, it has increased to 777, 777, increased by 74%.
Okay. And sir, if we see the revenue from the IPO and corporate action charges has increased at a CAGR of approximately 35% over FY13 to 17. Do we see, this kind of high growth to be sustained in next 2-3 years? Like, do we have that pipeline of IPOs and other activities which will support that high growth of revenue going forward?
Definitely, if market is good, definitely. Last 4 years, 16 crores we have won from IPO corporate action charges, and in 9 months only we have surpassed it. Okay. So it depends on a market. More number of IPOs are there, more number of participants from the retail investors are there, definitely will.
Okay. And sir, one last question, to talk about the IT cost. So we have a quarterly run rate at consolidated level of around 25 million. So do we see any major inflation in the next two years in the IT cost, or will it remain at the similar level in the next 2-3 years?
Last year, quarter 17, Q3/17, it is 256, it is reduced to 251.
Yeah.
So more or less it will remain same.
Okay, so we are not expecting any major inflation or, high maintenance or something in coming years.
No, that is whatever standard 7 to 8% increases.
Yeah. Okay. Thank you. That's it. I'll come back in the queue.
Thanks a lot.
Yeah.
Thank you. The next question is from the line of Rohan Shah from Chroma LLP. Please go ahead.
Hi, sir. Mr. Reddy, in 2010, we last received SEBI's approval for an increase in issuance charges. That was by about 50%.
But we got it in 2015 as well.
Okay, 2015 also. Okay. Yeah. So the next one would be 2020?
Well, and it's like betting with regulators, but then I don't know when it will be. But then usually for every 4 or 5 years we get some.
Okay, and what would you estimate? It would be in the same range of 40 to 50%, or?
Various other issues. What is the inflation that is there?
Mm-hmm.
What kind of additional issuer services that we have already introduced, or what are the regulatory burdens that are imposed on the depositories to cater to the issuers?
Okay.
All these in mind, they will revise it.
Okay. I understand. Now, coming to the other KYC verification, the new norms, what are the risks to our current KYC business?
See, currently, the SEBI has not withdrawn the KYC that is needed as per our requirements. The Aadhaar PAN is not mandatory. Okay. Currently, the depository participants have to necessarily collect the PAN.
Right.
So is the capital market intermediaries. Now, and the PAN verification is needed, and various documents that are being submitted have to be what you call in-person verification. There's a concept called in-person verification. Have to be certified. Now, after doing all that should be digitized. That is the current requirement. Now, Aadhaar-based, that essentially each time investor has to necessarily do the KYC with the intermediary. Okay, if it is the KRA system, then if one intermediary has done, then that can be used by another intermediary.
Okay.
So that kind of thing is not as yet there. So let us see. We are also speaking to Aadhaar. We are speaking to SEBI. And, requesting the KRAs to interact with UID rather than all intermediaries going and then interacting with that. So we are trying to find some kind of usefulness for the existing KRA system.
Right.
So that will, that's what our hope is.
Okay. And so what are the other ways of monetizing this data which we hold?
Well, we will not be able to, sell this data to anybody. That's very clear.
Okay.
And And without SEBI's permission, without the KRA regulations amendment, we will not be able to do that. Only for the capital market intermediaries can be used, and subsequently it is extended to the commodity market intermediaries as well. If government or SEBI thinks that this can be used by other financial sector intermediaries, and to that extent the usage will increase.
Okay, I understand. All right. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, there seems to be an audio loss from the management line. We request you to please stay connected while we have the management reconnected to the conference call. Thank you. Ladies and gentlemen, thank you for being on hold. We have the management reconnected to the conference call. So over to you, and we have the next question from the line of Rahul Agarwal from Stewart and Mackittich. Please go ahead.
Hello, sir.
Hi, Mr. Rahul.
So my first question is, sir, how do you see the growth in the registration of demat accounts, as it can be quite fruitful for your business? So how do you see that growth, since the economy has been doing pretty well in the past 1.5 years, post demonetization also, various people have invested a lot of money in mutual funds, which has led to a rise in registration.
See, we are looking for not just dematerialization only for the equity shares or the capital market products. We are banking heavily on the single demat account for all financial assets. And we have been speaking to the government that other assets like fixed deposits can be in demat, so is your insurance policies, and so are your company fixed deposits, etc. And we are at an advanced stage of discussions, and we are hopeful that will definitely drive the demat account opening and then their usage substantially.
Okay. And sir, since your operating costs are mostly fixed, like employee wages, software development, so having a fixed operating cost, since your revenue model can turn out to be volatile, as you were telling about the KYC, so how do you feel, like, are you making any provisions regarding that?
Provisions for what? I did not understand. What is that for provisioning I should do?
No, sir, like the KYC issue which you were telling, sir, can you give some light as how will it turn out to be? Like, is there any expectation that is there a negative impact of that on your business?
No, see, we have already, even at the time of IPO document, we have mentioned what are the risks in the business. Okay, when the central KYC, CKYC concept came, and the government said that all intermediaries must be doing using the CKYC, but then that did not establish itself, comfortably for all users. Now the KRAs are doing well-established system, and as KRA, what we have done is, in addition to as I said, that PAN is mandatory in the capital market, but that is not the requirement for banking transactions. or for the CKYC purposes. So what we have done is the intermediaries continue to upload in the CDSL KRA, CVL, the KRA, and they also upload the KYC. They also upload the PAN card and etc. We do the due diligence, including the verification of the data entered by the intermediaries. We make a file out of it and then give it back to the intermediary, who can seamlessly upload into the CKYC system. So that is what currently it is. That is how we have found ourselves to be relevant in this context. But at the same time, SEBI has also not withdrawn the requirement of uploading in the KRAs, the KYC data. So keeping that sword hanging in mind, we have said that this is a risky and any time may go. If SEBI withdraws that requirement of uploading on KRAs, probably some people may not continue to upload.
Okay. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Aditya Bagul from Axis Capital. Please go ahead.
Good evening, gentlemen, and congratulations on the stellar performance. Sir, just a couple of questions while you highlighted in your initial comments. We've seen quite a bit of jump in your employee and other expenses, even on a QQ basis. Can you highlight what could be the reason behind them? Also, is there a sequential increase in the number of employees?
There is some marginal increase in employees, about 10-15 people, okay? But that's not a big jump in that sense. Now, the rise probably you are comparing is with the 2016. And in 2016, in the first 2 quarters, you do not find the 20% rise that the board has approved for the employees from 1st October 2016, okay? That is the reason why in the comparison, you will find that there is a substantial jump. But then it will get evened out maybe in the coming.
Right, sir. Sir, I was actually referring to December versus September of 2017, where the employee costs have increased by about 7-8% quarter on quarter. 7% quarter on quarter. So I just wanted to understand, and the same cases with the other operating costs as well.
Yeah. If you see employee expenses on quarterly basis, if you see, that is, you want to see with September quarter, no?
Yes, sir.
That is 661. It has increased to 710. That is 49 lakhs is increased. That is 7% increase is there. That is due to, see, previous period 190 employees were there. It has increased to around 200 employees. Means 10 employees more are there. And annual increment and it goes on like that on monthly basis. That is a standard increase as such. Nothing more than that.
Right, sir. So there is no one-off in that?
No, nothing one-off sort of things.
Great, sir. So secondly, I just wanted to ask you, while again you touched upon your initial comments, in the data storage business, that is the KYC business, you talked about the issues that could crop up because of SEBI putting a cap on that. How far do you think that is from today, or has SEBI contacted you regarding something on that front, or do you think this will be a steady path for the next few years?
But CVL things.
No, you see, we are in touch with SEBI to requesting them to use the KRA business for the entire capital market. Today there is a interoperability that is happening, isn't it? Right. So even if you have even if you are connected to one KRA and the KYC that you wanted existed in some other KRA, you still be able to fetch that KRA because there is an interoperability. So what we suggested to SEBI is, since this interoperability is already existing among 4 KRAs, the CKYC also can be a part of this interoperability, and then anyone who uploaded on CKYC can also be fetched via KRAs. That is the way we have given the proposal. Okay, so we have not heard anything negative so far. In fact, we are positive about it.
Okay, sir. That's quite helpful. So lastly, if I look at your annual issuance charges, I just wanted to understand this concept slightly better. What is the trend in the number of companies that are charged on a portfolio or a folio basis as against on a capital base? And what is the reason or what is the change that a company has to go through to change from a folio basis to a capital base or vice versa?
No, the company has no role to play in that. Essentially there is a slab is there. Okay. Right. There are 4 or 5 slabs are there. And there are number of folios are there for each company. So number of folios multiplied by 11 rupees is what SEBI tariff says. If that exceeds the tariff, the slab in which they are falling, then they pay the higher amount. So it's not the company which chooses or I negotiate with each individual company. Okay. Mm-hmm. So 80 companies, 80% of the 83% of the companies, number of companies, mind you, pay in terms slab on slab basis, and 17% of the companies play on folio basis. But in terms of revenues, okay, 42% of the revenue come from the slab basis, and remaining 58% come from the folio basis.
Okay, that's quite interesting, sir. And just one last question on the same topic. Have you seen the number of companies who are charged on a folio basis? Have you seen that share increase over the last few years? And how do you see that going forward?
Once in a year we are charging, so next year we'll come to know.
Fair point, sir. Fair point, sir. Thank you so much.
Because yearly once only we are allowed to, fix this tariff based on the previous year's for this one, what you call number of folios. So we send a annual bill to the companies only on 1st April or in the month of April rather.
So if you see in financial year 16-17, 51% I have got it from on a folio basis. This year it has increased 17-18 to 58% from a folio basis. Like that trend is.
Total value of income, right?
Yeah, total value of issuer charges, annual income.
Right, sir. Right, sir. That's quite helpful, sir. Thank you and all the very best.
Thank you so much.
Thank you. The next question is from the line of Abhishek Jain from Valium Capital. Please go ahead.
Hello. Hello, sir. Congratulations for the good set. Hello.
Yeah. Thank you.
Congratulations for. Yeah. So recently I have read an article about the dematerialization of the private company accounts. So how big is the opportunity if in case it does happen that dematerialization of private limited companies, because the number of private limited companies goes to 6 lakh around. So how big is the opportunity for the same to the CDSL and NSDL, and how much of the share can be grasped upon by the CDSL? And my second question is about the opportunity size and improvements in warehouse receipts.
Okay. See, the first question with respect to the unlisted companies getting admitted, rather private limited companies. Yes, the higher the cost for the companies, the greater the opportunity for the depositories. But then obviously the MCA is also conscious that these companies are closely held, and for the sake of regulation they are forced to come to the depository and then pay for it. So obviously this tariff that we have currently applying for these companies, that is the listed companies or unlisted companies which are coming voluntarily unlisted companies, may not be applicable for those companies. Okay, then MCA may negotiate or they may come out with a common tariff, and that may not be very very big. But please appreciate one thing, that the government also looks at depositories as public institutions and public infrastructure institutions, which will help and aid the government in regulating all these companies, etc. So the work is big, no doubt. There will be substantial work for this, and maybe they will compensate for the work that we do, and not in terms of not too much margin may be left. That's the way I look at it, And coming back to the warehousing part, receipts part, the ecosystem is not fully developed as yet. Okay, the regulatory framework is not in place, in the sense the WDRA has promoted these warehouses registration, and warehouse repositories, or rather repositories have been promoted. But the RBI is yet to make mandatory for the banks to lend against only the ENWR, that is negotiable electronic negotiable warehouse receipts, and that is still in the in the discussion stage between RBI and WDRA and IBA, etc. Similarly, they have also taken up the issue with SEBI, so that SEBI can also mandate the commodity exchanges when they are settling the trades against the physical delivery of stock, that must be coming out of these ENWRs and that are kept in repositories. So once this regulatory piece is in place, then you will see some kind of growth in that business.
But how big is the market for the same? Like any ballpark figure?
No, we are not supposed to be guessing on that.
And sir, you have told that the common tariff will be there, the size will be big, but will it be like economical for you to operate that, or it will be a profitable size? Hello?
Yeah, definitely it will be economical, no doubt about it.
Yeah, it will be an economical. Anything multiplied by 6 lakhs will be divided between NSDL and CDSL, or?
Yeah, obviously. We don't know how many, whether all 6 lakhs will be there, or some of them are getting closed because of, some of them are shell companies, etc. And we shouldn't be taking that number as really, true in that sense. Okay. It may substantially come down also.
Thank you.
Thank you. In order to ensure that the management is able to address questions from all the participants in the queue, we request the participants to please limit their questions up to 2. Should you have a follow-up question, we request you to please rejoin the queue. We have the next question from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Yeah, hello team. Just a couple of questions on the other income. Like, it has gone down substantially. So, is there any mark-to-market loss we have booked there on?
Yeah. There is a depreciation in the value.
Okay. How much is the amount?
See, there is no booking of it. There is no actual loss.
Okay.
There is mark-to-market investment what we did.
No, I understand that, but what is the amount of that mark-to-market? Or let me put it this way, what could have been the other income had this not been there?
No, other income includes only investment income.
Correct.
If you see 9 months figure, if you see,
yeah,
as on December 2017, 1 minute. At 25 crore is there, 24.78 crores is there against 31.18 crores for the 9 months corresponding period.
Correct.
So in 2017, on a 7.52% we have won against 9.78%.
Against 9.78%. So last quarter was substantially low, sir. It was only 5.9 crore.
Quarterly, yes. 1 minute. And there also, 1 minute, just one.
Yeah.
Against 9.960 consolidated basis. You are talking. That is 907. It has come down to 592.
Correct.
There is overall decrease by 35%.
Yeah.
Because in this last quarter only depreciation yield has increased and on FMPs, all these bonds, because of that only.
Okay, okay. What is the cash level, sir, as of September? How much cash we are holding, net cash?
Net cash we are holding around 530 crores.
530 crore. And what is the capex, sir, this year? Capex this year?
This year already we have spent around 75 crores in property. House property we got it.
Okay.
And other capex is on an average 3 to 4 crores are always there.
Rupees 3 to 4 crore other capex. Next year also similar number would be there. Or next year only.
Except for property, it would be in the same line, 4 to 5 crores.
And any plan for property next year?
No. That is
right.
one time only.
Correct. Okay. Thanks a lot, sir, and all the best.
Thank you. The next question is from the line of Hiten Jain from Invesco. Please go ahead.
Yeah, could you help me understand your other expenses part, which has gone up from 8 crores in 2Q18 to 10 crores in 3Q18? Sequential growth of 25%.
Yeah, 1 minute. 1 minute, just no, other expenses. You want Q2 versus Q3 only, no?
Yeah. So it's a big jump, 25%.
See, there is a 1 minute, just.
Yeah, sure.
There is hardly any jump in contribution, business, no. No. See, 1 minute, that is 42 to 49, no jump is there. 124. See, posted telephone and communication charges, it has increased from 124 to 198. That is jump of over 74 lakh, that is 60%, because of e-case charges means
And lease line.
And lease line charges are there, but e-case charges as a major one as such. That is consolidated account statement we are sending, on which postage we are making. That is the major one.
So I didn't understand, sorry, what is this postage?
Postage communication charges has increased by 60%.
Okay.
Because we are dispatching cash, common account statement for the consolidated account statement for the mutual funds and etc.
Okay.
And where there is a physical thing is to be sent whenever there is a what you call bouncing of the emails. So that is one thing that has happened.
Okay, but this would be recurring thing in our business, right?
Yeah, but
then we are also getting the revenue, no?
Revenue also we are getting.
No. So that's what I'm saying. So this is a normal expense. Okay.
Yeah.
Then one more charge is that is of online data charges, means point of services charges also there. That is KYC income is increased. There also charges are there.
That's another major input. That is the KYCs, new KYCs created, and then we pay to the vendor who is actually doing the data entry, etc. So, and because the KYC income has also increased, and then there is a expense to that extent.
Okay. So some part of this expense is directly linked to KYC income.
KYC income
is a consolidated basis, no? This expenses are.
Okay.
So overall, if you see, only 3 crore is increased. That is 16% increase is there. From 1865, it has went up to 2171 total together.
Okay, and so the remaining is explained by this postage mutual fund thing, which is again related to KYC, and you are saying the vendor charge that you have to pay for outsourced services.
Yeah.
Correct. And my second question was on this employee in addition. So you said that we added 11 employees this quarter. So what is our plan in terms of employee addition going forward? Are we looking to hire people?
It's not like that. See, new projects are coming, no? This is National Academic Depository, then on CCL commodity. There increase in employees are there because of that only.
So what is our plan, like say for the
although there is no income from the commodity repository as yet, okay, but we need to have some employees out there, isn't it? So that is what the initial expenditure that is gone into it. I mean, that's why expenses have gone up.
Yes, sir, I understood that, but I was just asking in terms of a strategy, what is your plan in terms of hiring? Are you looking to further add people for this new projects, or you are done, or you are still contemplating about it?
We may add about another 10 people maybe in a year or so.
Okay, but not more than, not much.
Not much.
Okay, sure. The last question, sir, I missed that data point which you said your transaction revenue. Could you please repeat that for me once? 3Q17 number absolute and 3Q18 number.
One trivial front, no? Okay. Transaction data from 759 means 7 crore 59 lakhs. It is increased to 1271. That is
okay. So increase of 67% year on year.
Yeah, 67%.
This is one, and the other one is also IPO on corporate action.
IPO corporate action charges 122% jump is there from 375 to 834.
Correct. That's it. Thank you very much, sir.
Thank you.
Thank you. Next person is from the line of Nitin Agarwal from GM Financial. Please go ahead.
Yeah, hello, sir. Sir, request you to elaborate more on, how the CERSAI implementation will impact the KYC business. So, like you spoke about, when the central KYC will come, you are, requesting SEBI to get it linked to the already existing platform of the 4 KRAs. But so what I would just want to know, what is the exact event which will lead to a complete drawdown of this business? So will it be like a central KYC coming in and all the other KRAs will have to...
Already central KYC has come in. That is what the CERSAI is doing it, isn't it?
Yeah.
So, but then that is mostly banks are uploading it. See, if you look at that, how it works, how it operates is, the banks are doing the KYC. Each bank is doing it. There's no unique number based on which they are doing it. Sometimes Aadhaar, there could be without Aadhaar also the bank can open a demat account. The bank account.
Okay.
So whatever KYC they collected, they are simply uploading it.
Yeah.
Now, no one verifies the data entry. No one authenticates the documents that are submitted. Okay. In the case of KRAs, we are authenticating the PAN we are verifying with the income tax side. We are also, our intermediaries are doing the KYC, and then they are, they are saying in-person verification, they are doing it. And they are certifying the documents. Such kind of things are not there in the CKYC. So intermediaries are not comfortable about the data entry, the kind of quality of the document that are there in the CKYC. So not all intermediaries are also uploading it on the CKYC. So, and PAN is not mandatory again in the CKYC. It's only for the KRAs, rather in the capital market. Unless the CKYC also implement all these quality checks and also continue to take the PAN number, it will not be on par with the KRAs. Only when it is on par with the KRAs, then probably the government or SEBI may look at SEBI essentially may look at discontinuing it. But I don't know. I keep my fingers crossed.
But what are the probability that the CKYC will start using PAN?
Honestly, I will not be able to say that, because for many transactions PAN is not mandatory. Okay. Yeah. And if they say it is mandatory, then every bank has to necessarily collect it. Okay. So, which may not happen. Okay. So, my view is, that will not happen. CKYC collecting PAN number will not happen. That's my view.
So, we can assume that, the KYC business will sustain for all the 4 KRAs going forward.
I will not be able to, comment on the prospects of continuation of this business, but then, I keep my fingers crossed, and then under the fear only we are doing well. That's the way it is.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Lavish Jain from Sushil Finance. Please go ahead.
Hello, sir.
Hello.
Yeah. Hello, sir.
Yeah.
What is that unique thing which makes CDSL different from others?
Well, we have a bouquet of services. In some of them there is definitely, you ask any stockbroker, the service matters a lot, and we are in a service industry, and that makes unique. That's something which, that makes one feel that doing business with CDSL is not bureaucratic and it is business friendly. And while we are compliant on all fronts, we support stockbrokers, we support depository participants anytime, anywhere. And we are also innovative, and our products are also technology front also. You see that, some good amount of investments and low-cost solutions that we are offering. That is a very important thing. And you see that, for example, the DAS scanning, we don't charge anything but the competition charges and gives it back. And you, as a DP, you don't need to store that DAS, and I'm storing it. The competition simply digitally signs it and gives it back to you, and then you have to store that that particular DAS. So like that, there are many things. Those who are operating with CDSL will know what the USP of CDSL is at the operational level.
Thank you, sir.
Thank you. The next question is from the line of Rohan Shah from Chroma LLP. Please go ahead.
Yeah, Mr. Reddy, by regulation you have to retain 250 crores cash, correct?
By regulation, we have to retain about 100 crores for the depository,
50 crores
okay,
for CCRL,
and 50 crores for CCRL, and about 30 crores for CARL, and for another 30 crores for CVL.
That's 210.
That's right.
Right. So, what would be your guidance as to what the board would pay out, just to give a guidance to the street?
We have been paying out about 60%, 50.
Yeah, 60%.
60% is the payout ratio we have. On an average.
60% of your EPS.
Hello.
Yeah.
60% on standalone basis.
That's right. Standalone.
On standalone basis. Okay.
Yeah.
Okay. Because Bombay Stock Exchange cannot consolidate CDSL EPS anymore, so they would be happier, and even we would be happier if a big payout is given.
Yeah, definitely.
let the year end, then we will see.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Abhishek Jain from Valium Capital. Please go ahead.
Hello. Sir, how the revenue from GST service provider, Suvidha provider is shaping up, and in how much time you are expecting the business from this education digitization of the certificate?
Yeah. On the GST front, you are aware, we have imagined that there will be millions of returns will be filed, but then that itself is a cause of concern for the taxpayers. So government is minimizing the filings. So to that extent, obviously GSP earnings will be lower unlike as expected. Similarly, the GST is not stabilized because there are so many changes are happening in the system at the GSTN as well. So it will take some time before everybody gets used to the filing via GSP. So that is the comment on the GSP. When it comes to the National Academic Depository, government has said that we can't charge the academic institutions for next 2 years. So we will not charge them. So that revenue may not come. But most important revenue that we can do is the verification charges from academic institutions, employers, etc. Verification charges will come only when the data is uploaded, and the academic institutions are very slow in uploading the data. And the more the old data they upload, the sooner, the greater will be the usage of the academic depository. Otherwise, if they say that only current year we will upload the data, but then we will take another 5 years to fully populate it with the 5-year data, then only it will be used. To that extent, the gestation period will increase. But if the academic institutions choose to upload their old data also, so that they can avoid they can provide better service to their customers via NAD, then the usage will be much higher. So we are at that threshold. the government is pushing the academic institutions to upload the data as early as possible. And in the recently also in Delhi there was a state education ministers meeting, and they have been requested to push the academic institutions to upload the data as early as possible.
Sir, there are 34 shortlisted for this GST service Suvidha provider. So, what share you are expecting from that aspect?
Well, as I said, the market itself we are not able to quantify as yet, because the number of filings that are required are coming down. So it is too early for me to premature to make any comment on that.
Yeah. Okay, sir. Thank you.
Thank you. Ladies and gentlemen, due to interest of the time, we take the last question from the line of Amit Chandra from HDFC. Please go ahead.
Hello. Hello. Yes, sir. Thanks for the opportunity. So just want to understand that we have been saying that we are gaining market share. So in terms of incremental market share, 60 to 70% of the incremental market share CDSL is gaining. So what exactly is driving this, and what are the benefits that you are providing versus competition? Is it pricing, or is it service, or and can you elaborate on the pricing structures versus competition?
Well, pricing doesn't make much difference. If you look at the growth in demat accounts, major flow comes from the banks. Okay. Now the banks like your HDFC Bank, ICICI Bank, Axis, and the SBI. These are all the ones who are driving the 3-in-1 account growth. So they contribute partly in NSDL, partly in CDSL. Of course, service makes them to decide where to do what. Apart from service, maybe something once in a while the contest they conduct, and for their employees, and we participate. That also makes the difference. But more than that, assuming that these banks are contributing equal number 50-50, what gives us the major growth is the depository participants other than the banks and financial institutions. We have 590 total DPs as against NSDL about 280 plus or 260 plus, and a substantial growth comes from these DPs who are exclusively with us, and there are many DPs who are exclusively with us who are driving our business. And since the markets are booming and they are also doing well, the stockbroker DPs, and many accounts are opened by them. And mind you, vis-a-vis the stockbroker DP, vis-a-vis the bank DPs, the stockbroker DPs open most of the active trading accounts. In the sense, it's not just 3-in-1 account where a salary account is opened. So you open a bank account, you open a demat account, and that may never be used. Sometimes, there are sometimes they do open, but the stockbrokers make sure that the clients substantially trade or do capital market investments.
So you're saying that you're more penetrated on the retail side rather than the institutional side, and the focus is going to be the same, or is going to change?
Well, we are not ignoring the institutions or anything. The institutions also give us business. But it is the retail which matters a lot, because custody, for example, the FIIs may be having used custody in NSDL vis-a-vis the CDSL. But a retail investor sells 100 shares and FII sells 1 lakh shares or 2 lakh shares. Still they pay us only 5 rupees. Okay. So what matters is more and more retail accounts and more transaction-based accounts rather than big value.
Right, but in retail, the cost of serving a retail account or cost of acquisition.
But we don't service them, isn't it? We are not dealing with the investors anyway. It is the depository participants who are dealing. We don't directly market to the investors.
So, but in terms of the addition of account, there is cost associated to it.
Come again?
Hello.
Hello.
Mr. Chandra, can you speak closer to the phone? You're not audible.
Yeah.
Thank you.
Is it okay now?
Yes.
Yeah. So in terms of adding an account, so is there any cost associated to it in terms of adding?
No cost. Absolutely no cost.
Okay. So that's why like I was saying your revenue market share. So in terms of the accounts market share, it's around 45%. But in terms of revenue market share, how much it is?
No. In fact, accounts market share is aggregate is yes 45%, but 46% almost all. Now in terms of revenue also, it's about 42-43%. It's about that.
Okay. Okay, sir. Thank you, and best of luck.
Thank you. Ladies and gentlemen, with this, I hand over the floor back to the management for their closing comments. Over to you, sir.
Thank you, every one of you, for participating in it. Thanks to Axis Capital and Mr. Praveen for organizing this. Thank you, madam, for coordinating the call.
Thank you, sir. Thank you.